we are gonna do a quick training session for traps. Trappy traps. So this is my MA chart, and I've marked bear traps, bull traps on XRP. XRP is trickier to trade because of all the choppiness before the breakout. It's already had its nice little breakout out of the Wyckoff accumulation, and right now we're expecting continuation. But the question is it going to be continuation without correction or continuation with correction? Okay, now we're going to look at the 50 MA, and you can see the way I have set up the chart. This is my MA chart, and I'm a minimalist in life, and I say my rule for everything is 5 of everything. So 5 MAs, that's it. I'm not going to clutter my life with a lot of information that will raise more questions rather than give me more answers. So as you can see, even the 4-hour is super choppy for XRP. That's why it's handy when you're trading this choppiness. Choppiness is sideways. So when you're trading sideways, you're trading levels, you're trading ranges. And it's good that the 50 MA should be the backbone of that. So the 50 MA is the backbone holding price action to the upside or holding price action to the downside. And that's where the market makers are, that's where market makers plan the traps. And the traps are there to entice you to commit your liquidity to your direction. If you, for instance, have started a short position because price action has crossed down, then it's more likely for you to hold your position open. Now, don't want to start waffling now. You know what it is. So, how do we spot the traps? First, we spot the crossing of the MA. There are 2 steps for spotting the traps, and then 2 options for you to do in case you've spotted a trap. What do you do when you notice you have been trapped? I will start, and I've identified here a 1 bear trap, 1 bull trap, 2 double bear and bull, and we'll discuss them. And again, non-trap areas. So here there were non-trap bull areas. Sorry. So these ones here weren't traps. These here were traps. And I'm going to expand here. So how do we identify a trap? We notice the crossing. We notice the crossing of price action on the 50. Here's where price action breaks the 50. There is a slight lift and then continuation down, slight lift. It's not even a swing. A swing to me is more than 2 candles in the opposite direction. So this is what for instance, this would be a swing for me. This would be where I would take my short entry, this V. More than 2 candles, because more than 2 candles is when price action loses strength in one direction and the opposite side starts fighting back. 1 little candle is just a mini retracement, it's not a swing. So here we had the crossing, and then we had a nice swing down, which finished here. Then we had the first swing up, and then the second swing failed to break. Then we had another swing up, and then the third swing failed to break. So we have 3 swings here. First one does a low. This is where the MA was broken. Second, the the first swing after the one that breaks the MA doesn't break that low. Second swing doesn't break that low either. So you have seen the MA get broken. You've had continuation once the MA got broken. But after that initial swing, there was no continuation in momentum. After the retracement to the upside, sell momentum stopped at the higher level. And that didn't happen only once, it happened twice. So you wait for the swing that breaks the MA to finish. The next swing should break lower. The next swing should break lower. If they fail to do so, you have two options. One, you secure your entry with your stop loss. You move your stop loss at entry, and that is what you should do if you're not happy with the profits that you're having. So if the profits are small and you don't want to secure profits, you secure the stop loss and you give price action space to move down further. If you are happy with your profits, you have option 2, you secure your profit with your stop loss. So in this case, I would be waiting for two swings on the 4 hour. And the reason being is, in my case, I used to close 4 hour trades way earlier. I would be closing them, let's say, somewhere around here. And I would be missing sometimes a real move like this one here. That's what happened to me more often than not. So that's where I worked on my trading strategy to give myself the space to secure. So after this swing, I would secure my entry here. After the second swing here, I would secure my profit here, because after 2 swings on the 4 hour and after that drop, chances are quite high that this is not gonna break any lower. Okay, I'm gonna show you another trap in the opposite direction because it does the same thing. Okay, so here is where price action broke the 50. Lovely swing up. Then we have 2 candles down, another swing, first swing after the break. A higher high. Excellent. You wait for that. Then another 2 candles down. And I think this is a lower high. Same double top to a T. It doesn't break it. So we've had 2 swings, 2 V's, and we couldn't break the previous high significantly. What do we do after that? We get rejected and we push down. We backtest the 50, we continue, backtest the 50, continue, backtest the 50, continue. Here it is not a trap. Here is the real move. This one here was the trap to secure the liquidity from the bulls, because the bulls are seeing these swings hold on the 4 hour, but after the second swing doesn't manage to break significantly. We're talking about a significant move on the 4 hour, again at least 10% move in a direction that would be showing momentum continuation. Just give me a second here because I want to see what's going on here. Having a buy vector on the 50 EMA on the 1 hour is generally a buy signal. So unless I see continuation down here, I am looking to secure my position, because this could be just a liquidity collection here. And then that's it. We're going to come down. But I will be looking for the close of the 1 hour candle. I'm not going to go in now, when again it might just be trapping liquidity here to the upside and then bringing it lower. Okay, so that was the bull trap. We break the 50, we have 2 V's, we don't go anywhere, and then we retrace down. And now I'm going to show you the double ones. So here is where we had, again, in the sideways, these things happen because of how close price action gets to the MAs. So here we have the breaking of the 50. First one is the bull trap. We have 2 swings. They don't go anywhere. We actually have 3 swings, 4 including this one. So loads of sideways, loads of, but this one is after the breaking of the 50. That's true. And then we break down. And here is where we break down. We retrace. We break down lower, which is great. We retrace, but then we do this one. And here's where, personally, I would be looking to secure profit. I would not be waiting for this mess. This mess is horrible. Yes, if I use my overall knowledge of, look, we've done level 1, level 2, level 3, but if I'm just looking at the relationship with the MA, I'd say this is too choppy. I will secure profit because this is taking way too long to break to this level. I would be wasting this profit here, but I would be happy to secure profit. I think I would be securing profit somewhere around here or even somewhere around here, just to keep my position safe, and then looking to enter along in this area when it hits the level of support, the next level of support that I have. The same happened. Just a second, guys, because it's looking like it's doing a, okay, it's back testing. Do we have any news at the moment? Is something coming out now? Oh, it's the, no, because it's 11. Okay, it's just doing some back tests here. Okay. Is the 15 getting exhausted? Let me have a look here at the wave trend. It's not looking great, but I don't have buy signals yet. Okay. All right. So here again we had a double. First they trapped the bulls, and then they trapped the bears again because we are in this sideways. So we break the 50 here. We continue. Lovely. We have a swing up. We don't break by a lot. We still do a higher high. Another swing up. We don't break by a lot. Here is where I would be taking profit because again we are spending a long time just to do these 3 little higher highs. Not good. It's not looking good. So again, I would be securing profit or my entry by the time we do these 3 higher highs, especially since we're reaching this level. But then it stays along the 50. So here it's trapped the bulls, and here is where it's going to trap the bears. Because it breaks the 50, back tests, does a nice swing down, continues, retraces, does a lower low. Fantastic. And then does a higher high and doesn't come back to this area. Yes, it does a low here, but just after, let's say you've entered here, look, it takes you right back to your entry point. Again, not worth staying in for all of this mess. If you've seen one swing up, one swing down, one swing up, here is where I would be securing profits here. And I would be taking, let's say I've entered on the back test, I would be taking 60%. I would be missing some of the profit, but I would still be taking 60% and not be in all of this choppiness back to my entry point. Okay, so just to recap, I need to remove all these drawings. There we go. Just to recap, the 2 steps of setting up a trap are: 1, the 50 MA is broken. 2, there are 2 swings on your time frame. You can check it on the 1 hour, you can check it on the 4 hour. I don't check bull traps on the 15-minute or smaller intervals than 1 hour, and I don't think they are relevant at those intervals. I think the 4 hour is the best. I think the 50 the daily might be also good, but the 4 hour to me is ideal to map out levels and any sort of I forgot that I removed my levels with the drawings as well. So the 4 hour to me would be ideal for the bear traps. And again, I'm interested in the bear traps because they influence which direction this is going to go in. For instance, at the moment, I'm waiting for the 4 hour to retrace back to here. The 60 on the 4 hour would be where I see this going. But anyways, so wait for the 2 swings on your time frame. After those 2 swings, check to see where those 2 swings have gone. If they haven't broken a significant lower low or a significant higher high, you have 2 options. One, to secure your entry with your stop loss, or to secure your profit with your stop loss, if the profit is considerable. So if it gives you a 60% profit and you are seeing significant signs of a retrace, secure your profit. If it doesn't give you enough profit and it's close to a breakout and it's looking like it's just going to do another spike to the high before breaking in your direction, then you can just secure your entry, and that will give you peace of mind to follow price action and give it a little bit of space. I would not advise you to go into your stop loss at all times when you are fearing this might be a trap. So that's it for me today. I tried to stay concise because I know it's Monday. I will be breaking the video down into 2 parts. I will be posting the training session separately so you can give it a try and listen to it a couple of times, because I know there might be information, and you can map out ETH and BTC or whichever coin you're trading to see backtest some bear and bull traps along the 50 MA on the 4 hour. It's really good to train your eye. You can do that on the day as well. If you are more looking to spot trade on the daily, it would